use it? Well, to do the W-4 would be no other than Mr. Greg Pitts. How are you doing, Mr. Greg?
Thank you, sir. I'm so glad to be back and sharing again the Form W-4 form. That's I love taxes. You know, I shouldn't say I love taxes, but I understand it, and I'm really addicted to numbers. In addition to that, I'm addicted to word games, and the W-4 seems to have both of those in there for me. You know, so what I'd like to do is I hope if there's any confusion about the W-4, I hope to clear it up. But we all know that 80% of Americans have filled out their W-4 form incorrectly. And by the time I get finished with this, I'm going to show you, or attempt to show you, why people are so confused and what you can actually do about it. You know, by showing you the W-4 form and also introducing us to the tax withholding estimator, which you'll find out a little bit more about in a little bit. Okay, so let me just kind of clean up a little bit and go full screen and introduce you to the Form W-4 form. Okay, we all know that we have 5 financial strategies within myEcon that we try to teach, that we do teach. You know, quick cash flow with the W-4, minimize your taxes by way of business deductions, debt elimination strategy, build great credit strategy, and invest like the pros. We have all the things right here within our financial success system, you know, that can give you that basic understanding of what we're doing. Okay, so part of the financial success system, number one, we try to show people how to make more money using financial strategies. And 2, how to make more money by way of business building. Okay, notice in here, nowhere does it say go out and get a job. Okay, a job is not a financial strategy. It's a labor of love. You know, but the only problem with finding an additional job, you have a time factor. You know, but we teach strategies that people can use. And I like to go back towards the quick start orientation with Stephanie. And the number one thing that she talked about was getting more money back into your paycheck. And this is how you do it. You try and help other people to do this, but if you are still an employee, please take the time to understand what we're doing within the W-4 and apply it to yourself first before you even begin to attempt to explain the W-4 to people. You know, W-4 is a very confusing document, only because you only receive the W-4 form with your initial meeting with your new job or you starting a job to begin with. That's the only time in life that you'll ever see a W-4 form, when you start a new job or when you start working, period. Okay, we're all used to waiting at the end of the year for your W-2 form. Okay, your W-2 form will keep all the records all year long about the money that you made, but the deductions are determined by the W-4. Okay, but I'd like to introduce you to a few more forms because we're talking about money here. And the IRS is that governing institution that's going to keep track of your money even when you don't. The IRS is going to do that. So in addition to the W-4, we have the W-9 for business owners. And the 1099, which is the very same thing as a W-2. At the end of the year, you'll receive a 1099 from a vendor who may have paid you money. But you had to submit a W-9 form as an independent contractor before they will issue you a 1099 or your W-2. We're all familiar with the 1040 form. You know, it used to be a long form and short form, but nowadays it's just one form. And as a business owner, you'll become familiar with the Schedule C form. Okay, but we're here to talk about the W-4 and the tax withholding estimator. Okay, so that's the first two strategies that we come to. Quick cash flow, increase your money by way of W-4 form, but then we'll talk later on about business deductions. Okay, our W-4 form. Got to first give you a disclaimer. myEcon does not guarantee that you will receive an increase in your check by adjusting your W-4 form. The results will vary based on each individual's unique situation. Always know that there's 100 million different situations out here. The W-4 form protects against having too little tax withheld and facing an unexpected tax bill or penalty at tax time next year. And note that the average refund out here is $3,000. You may prefer to have less tax withheld up front during the year and receive more in your paycheck, which is what myEcon strategy suggested that we do. Okay, let's take a look at our example. We're going to be dealing with the Johnson family. They're going to be filing jointly. And they have a total household income of $105,000. The husband is making $50,000 and the wife is making $55,000. Excuse me for a second. I hope you guys are not hearing that. Okay. They have two dependent children, age 7 and age 10, and they spend $6,500 a year in child care expenses. Okay, so when you're dealing with a family, you always want to get both the husband and wife together, especially in this example, because we're doing married filing joint. So you want to have both people present with you, okay? Both of them with their most recent paycheck stub in front of them before you can even begin to understand what's going on, okay? The Johnson family is just like everybody else in America, it's like so many people in America. They work all year long. They wait for the end of the year for them to receive a W-2 form. They take their W-2 form down to their tax preparer and hope and pray sometimes that they don't owe or they're going to get a refund back. But that's typically the strategy that most people have. They just work all year long and then hope at the end of the year that they get a refund. But by adjusting your W-4 form, you can actually take control and know whether you're going to receive a W-2 or receive a refund at the end of the year or not. Okay? Let's talk about that W-4. Okay, before we get started, you have to know that there's a history behind. Up to 2019 and years prior, it used to be called an employee's withholding allowance certificate. The government actually gave you an allowance for the amount of the exemptions that you had during the year. Okay, then things changed around in 2020. In 2020, it's no longer called the allowance withholding allowance certificate. It's just called the employee's withholding certificate. They did away with the allowance, and then they also introduced you to the tax withholding estimator in 2020. So know that when you're dealing with people, you may have a W-4 form that was prior to 2019, or you may have a W-4 form that's 2020 and newer. Okay? So the employee is going to get the W-4 form, but you have to realize that this is a two-edged sword. Okay, you get the W-4 form, but your employer gets the 15T, publication 15T, which is going to determine how much money comes out of your paycheck. Okay, so when you get your W-4 form, your employer has that form 15T, as I said. And they have to have a W-4 before they will issue you a paycheck. Before you're issued a paycheck, you must fill out a W-4 form. Okay, your employer is going to determine how much money comes out for you to pay your tax, for your tax liability. And they're going to have three tables that they use: a percentage method table, where they just take a percentage of your gross income and take out taxes there. And then they have a table, a wage bracket method table for forms 2020 and later. And then they also have a table for W-4 forms 2019 and earlier. But all that's there so that they can determine how much money to take out of your paycheck on a periodic basis. Okay, you on the other hand, you're going to get your paycheck. And when you get your paycheck, normally people, they look at their paycheck and say, well, if I made $2,300, how come my paycheck is only $1,800? Okay, that's the first thing that the average person sees. They see their gross, and then they see what they come home with. And then they look at the table here, and they see a long list of different places that have taken money out of their paycheck. You got the federal tax, you got state tax, Social Security, Medicare, alimony, child care, child support, any garnishments. All that comes out of your paycheck before you get your paycheck. And it's determined by that publication 15T. Okay. The federal tax is the only tax that you can have, that you have an ability to monitor. Okay. You'll either owe at the end of the year, or you'll receive a paycheck, or you'll receive a refund at the end of the year. But it's up to you as to when they get it and how they get it. But if you have a job, typically they're going to take it out periodically every paycheck. Okay, so that tax estimator is what's going to help you keep control over that. Okay, so let's take a look and see what the employer is looking at. Because remember, the employer is going to have control before you get your check. Okay, so what it states, it says Form W-4 contains 5 steps. Every Form W-4 employers receive from an employee in 2020 or later should show a completed step 1, which is your name, your address, your social security number, and the filing status, and a dated signature in step 5. Employees complete steps 2, 3, and 4 only if relevant to their personal situations. Step 2, 3, and 4 show adjustments that affect withholding calculations. So as you get this W-4, I really want you to study it and take a look and see, where can I make adjustments on this form? Okay, but they're telling you that they want your name in part 1, your signature in step 5. For employees who don't complete any steps other than steps 1 and step 5, employers withhold the amount based on the filing status, the wage amounts, and the payroll period. See exemptions later for those people that go exempt during the year. Don't recommend that you go exempt because they're not taking anything out. And then at the end of the year, you're stuck with a big bill. Okay, so we don't recommend anybody go exempt. Okay, the employer is going to go to a table like this to determine if you're married filing joint, head of household, single, or married filing separately. And if you notice up top, this is a 2022 wage bracket method table. So we've got to get used to those different terms that they're going to use all the time. So let's take a look at steps 2, 3, and 4 closer. Okay. In step 2, and this is why a lot of people get confused. The first thing that says step 2, multiple jobs or your spouse works. Okay, so that immediately takes that single person, and a single person says, I don't have to read the rest of it, because we don't like to read anyway. and especially when it comes to this. Okay. But it says multiple jobs or your spouse works. In this example that we're going to use a married filing jointly person. So we will continue with that. Okay. Then it says complete steps 2 through 4 only if they apply to you. Otherwise, skip to step 5. Okay. Now, when I say we play word games, the IRS has a way of making those things that they want you to see, that they want you to understand, they put it in bold letters. Okay. So your employer is going to see in the form publication 15T. Okay. Step 2, it says if the employees check the box in step 2, and we're talking about this little box here, the employer figures withholding from the Form W-4 Step 2 checkbox column in a percentage method or wage bracket method table. Word games. Okay? There really is a column that says it's the Form W-4 Step 2 checkbox withholding column. And that's in every one of the situations. The head of household, married filing separately, they're gonna have that table there. So if you check the box right there, okay, that's what they're gonna refer to. This results in a higher withholding for the employee if the employee chooses one of the other 2 alternatives from this step. Because you see they got three alternatives up there. A, B, C. Okay, those are the 3 alternatives there. If the employee chooses one of the other 2 alternatives from this step, the higher withholding is included in the additional tax amounts per pay period in step 4C. Okay, so now this is the employer that's reading this. This is the guideline that they have for step 2. Okay, look at it a little bit closer. Again, you'll see that, but it says complete this step if you hold more than one job at a time, or you're married filing jointly and your spouse also works. The correct amount of withholding depends on income earned from all of these jobs. Then it says do only one of the following. Either use the estimator, and they give you the address to pull up the estimator, okay? For the most accurate withholding for this step, or use a multiple jobs worksheet on page 3 and enter the results in step 4C below for roughly accurate withholding. Or 3, if there are only 2 jobs, you may check that box. And that's that box that we talked about a little bit earlier. It says do the same on Form W-4 for the other job. Okay, so if one spouse checks this box, the other spouse should also do the same thing. Okay, so if you have a spouse and you're not communicating with each other and one checks it and one doesn't, somewhere along the line, you're falling out of sync because you're filing as married filing jointly. Okay, then it says, okay, I went over that. Then they have a tip. It says to be accurate, submit a 2022 Form W-4 for all other jobs. If you or your spouse have self-employment income, including as an independent contractor, use the estimator. Okay, then they have another little section here. It's in part 2, but it's pertaining to steps 3 and 4. But they got it in bold letters and they want you to see it. It says complete steps 3 through 4B on Form W-4 for only one job, one of these jobs. Leave those other steps blank. Leave those steps blank for the other jobs. Your withholding will be most accurate if you complete steps 3 through 4B on Form W-4 for the highest paying job. And they got that in parentheses. Here we go with the word games, okay? They got bold letters and they got it in parentheses. So it's up to you to keep reading what you see on that W-4 form. And you may not even see a W-4 form nowadays. They may not give you a paper form. You may sign electronically, but you can believe that your employer does have a signed and dated document from you, and it's based on this W-4. Okay? So what we're going to show you is how to use that estimator, because that estimator is our way of double checking and making sure that we're in a good shape for the year. Okay? You'll go to you can Google tax withholding estimator, and it'll give you a date, and it'll take you directly to the tax withholding estimator. Okay? Step 3, claim dependents. Okay, in this example, you know that we're going to do the household that has 2 dependents in there. Okay. Again, I highlighted this because I really want you to know that that's there. And then it says for the claim dependents, if your total income will be $200,000 or less, $400,000 if you're married filing jointly, multiply the number of qualified children under age 17 by $2,000. Okay, so they have 2 children there. It would be $4,000 here. Okay, multiply the number of other dependents by 500. But let's see what your employer is looking at. It says employers use the amount on the line as an annual reduction in the amount of withholding. Employers should use the amount that the employee entered as a total in step 3, okay, of Form W-4, even if it's not equal to the sum of any amounts entered on the left in step 3. That's where those 2 children were, because a total may take into account other tax credits. If the step 3 total was blank, but there are amounts entered on 1 or 2 of the lines on the left in step 3, the employer may ask the employee if leaving the blank was intentional. Now you see how the IRS has played these games, and you wonder why 80% of Americans were just confused when they fill out their W-4 form. They see it one time, and then they're expected to read this and actually understand what's going on there. Okay? So let's go a little bit further. Step 4. And it says it's optional. It's just other adjustments. They got very little instructions for the employer. You know, if you have extra income, you put it on 4A. You got extra deductions, you put it in 4B. If you want extra withholdings, and it's not a bad thing to have extra withholdings, especially say like if you're a business owner and you're required to take care of your taxes that you made on the income that you made by way of your business, and you have a job, you might want them to take some extra withholding from your job so that you don't have to come up with a quarterly amount every time you do your quarterlies. You know, when you're in business, you should do quarterlies after you reach a certain amount of income that comes in.